Hey everybody, welcome to Equity Guru. I'm Chris Parry, faithful leader of the Guru team. With me, I've got Jason Bahnsen from Tempus Resources. TMRR is the ticker symbol. Jason, you've got well, I guess it's not unique, but it might be unique in the Canadian space in terms of you've got a Canadian project, a Ecuadorian project, and a significant shareholder base in Australia. How do you find the Bi-hemisphere way of doing business?
Well, it can be quite beneficial. Sometimes we find the markets can be stronger in one place or another. We've just done a recent sort of capital raise here in Australia. But we want to build that sort of shareholder base up in Canada as well. Currently only about 10% of our shareholders our shares are held in Canadian hands. So that's something we're going to do in the future. It makes sense. The assets are here in British Columbia, and management is here this time zone. We want to build up a sort of following here.
How do you find it working in terms of, there's rules for public companies in the mining space in Canada and in Australia, and they're not necessarily the same rules. Your 43-101 doesn't necessarily translate the same in Australia. Do you find the extra workload to be problematic, or are the different worlds coming together a little bit in recent years?
It's not too bad. They're reasonably well aligned. Let's say the listing rules in Canada on the venture versus Australia, they both kind of come at it from protecting minority shareholders in a slightly different way, but the outcome's the same. Sometimes it's a little bit different. Like in Canada, you traditionally have a 4-month hold. You don't have in Australia. In Australia, you can do financings very quickly. They're done in a different sort of methodology where you typically halt the stock, as ours had been halted last week, and then enter into a negotiation with someone and announce a deal. On the JORC versus NI 43-101, I think that both codes have been around a long time. They're pretty closely aligned. In fact, our resource estimate we're working on will be JORC/NI 43-101 compliant.
Okay.
So, it's just in some of the disclosure and how it's done. You can cover both. So, yeah, in both there's some advantages and disadvantages. I have 2 sets of regulators that want to call me and talk to me about things occasionally. So,
Right.
There's a little bit more on the bureaucracy, but it does give us access to capital in both markets.
And extended trading hours, not to mention.
Effectively, yeah, extended trading hours, and that's right. My Australian day starts at 2:30 in the afternoon here in BC. It starts on a Sunday as well, so that applies to the management as well.
Good times.
So, yeah, there's not that much liquidity in Canada yet, and that's one of the things we want to address with just getting some more shares in circulation is really what it's been.
So let's talk about the properties. I want to focus in on your BC property. BC mining, has got a bit of a bad rap, I guess, traditionally, and that it's been a little harder to get things moving here than some of the other provinces where you get your mining permits in the bottom of a cereal box. But talk to us about the project that you have and what makes it great.
Yeah, well, the project is Elizabeth Blackdome, and it's really effectively 2 projects. And this is the first time that they've really been in one clean ownership structure. We cleaned up the option on Elizabeth. But the 2 projects are slightly different. Well, they're different from a geological point of view and different stage of development. Blackdome, which was an operating gold mine from 1985 to 91, and that's on mining licenses. So it has an existing mill that is only had 5 years of production, 300,000 tons of it through that mill. So it can be, and we've done some extensive work on engineering work to a project finance pre-feasibility level on the restart of that mill. and we can turn that on within 6 months' time. And it's 200 ton a day. So that's a huge advantage, both from a capital cost point of view and a permitting point of view, because this mill also has an associated tailings dam. We just finished the sort of 5-year closure plan on that tailings dam for a government requirement. So it's fully in compliance. That's going to save years on any typical sort of permitting. Now, with all that infrastructure, where the resource at Blackdome, it's an epithermal resource, and it does have upside, but at the moment we're focused on the resource at Elizabeth. So while we've over the last 2 years, we've been drilling at Elizabeth. It's 30 kilometers due south of this mill at Blackdome, and it's connected by a potential sort of haul road that connects the two projects. They're contiguous group of claims, in fact, over the whole thing. And you know, they're quite large in size, 315 square kilometers in total between the two projects. So Elizabeth is an orogenic mesothermal deposit, very similar to what we see at Braylorn, similar geochemistry, similar rock types, and Braylorn, of course, being the, you know, the historic mine that produced 4 million ounces of gold over a 70-year period, just to the south of Elizabeth. So we think it's very similar to that. We've done 20,000 meters of drilling, and what started as just a few veins that we're drilling is now sort of 6 veins that we had in development. So we've had some spectacular results. And I guess what really sets the projects out, both Blackdome and Elizabeth, is the grade. It's extremely high grade by any standard. So, you know, we have had, you know, last few months ago, which was an intersection from late last year, you know, 28 grams a ton over, you know, 28 and a half meters. So there's nothing wrong with that. It's pretty spectacular grades. And that's quite consistent. We see plus 1 ounce per ton grades in the resource. So excuse me, we're over the past couple of years, we've been working on an update. There is an historical resource on Elizabeth and Blackdome. On Elizabeth, it's 206,000 ounces at 12 grams per ton. We've done a lot more drilling. Like I say, we've done 20,000 meters of drilling. There was some additional drilling that was done after this 2009 resource. So we're working on that right now. We're just tidying up a block model on the resource, and we'll be having an updated NI 43-101 resource out before the end of June.
Okay.
So and I think that'll be a significant sort of uplift. It's a significant amount of new information. We have multiple now veins. Historically, that historic resource, 70% of it was all in the one vein, southwest vein. And we did some drilling on that in the first year, and now we've discovered 2 or 3 more veins. So it's really starting to flesh out as a much larger scale project. You know, I'm not sure what this initial resource, it'll be a significant uplift from the historical 200,000 ounce resource we had there. But we're really, what makes this interesting is, one, it's super high grade, and then with all this infrastructure in place, you know, that we're really looking at this as a near-term production scenario, that we could bring this online within you know, a couple of year period of a couple of years.
So you're certainly in a location where some of the big boys have been playing, or you're basically ring fencing Barrick. But you've got Teck down there, you've got Talisker, you've got Endurance Gold, New Gold off to the east. This is obviously a part of BC where mining is not frowned upon, and a lot of bigger and smaller guys have found enough of a whiff of the shiny stuff to dig in. Do you feel like this whole area is going to light up in the next couple of years?
I think so. I think people, this is a new, new emerging sort of gold district. Everybody is referring previously heard about the Golden Triangle, quite a bit, a couple thousand kilometers to the north.
Yeah.
This Bray Lauren Pioneer Gold District, there's about six sort of players there, as you mentioned a few of them right now, that are all at a similar stage of development. So that's one of the things that I think is attractive about the regional setting from that point of view is there's opportunities for consolidation there and doing deals, operational synergies. We have the only sort of mill that's there in that whole area, so that's another sort of aspect as well. But it certainly makes it interesting, or increases the sort of optionality of it for the company and the shareholders, of course.
And a 4-hour drive from Vancouver doesn't hurt.
It's very accessible. There's no helicopters here. We can get there quite easily. We'll be starting our season up this, we're gearing up for it now, starting to open up the road to site. We'll be getting starting work there in June. We have a pretty exciting sort of program this year. I mean, we have a number of sort of key news events coming out as well over the next couple of months. One, the resource that we've just been talking about, and two, we did do a detailed study of the mill, on the restart of that mill, the capital cost, bringing in the operating costs, expansion opportunities, and we'll be putting those results out after the resource. As well as our exploration plan for the year.
So busy time coming for BC. What does it look like for Ecuador?
Well, Ecuador, we have been done quite a bit of sort of soil sampling there over the last couple of years. We've done all the groundwork. It's sort of drill ready now. Both projects. We're on Valle de Tigre, which is prospective for both copper and gold. We're doing some sort of further work to define the sort of drill targets. And then, I think with Ecuador, it makes sense that we're seeking a partner with Ecuador. So that would allow us to focus on British Columbia, on Elizabeth Blackdome, and bringing that closer to production.
Okay.
So that's sort of, we're almost at that stage now that those projects are ready, and it's a super prolific country from mineralization. All the majors are down there, certainly in terms of sort of copper porphyry potential, and that's what our project has as well. So
got it.
But 90% of our focus is in BC, and we haven't earmarked a big program for Ecuador this year. We're just doing some further definition work on the drill targets.
Got it. So back up to Elizabeth, that and Blackdome, that Blackdome mill. I kind of like the fact that, if you get that up and running, what's the chances that you get a piece of everybody's action in that area?
Well, that's possible as well. We could be, to toll treat, use that mill to toll treat other ore. And it's, fast to sort of cash flow. It's only about 6 months to get that turned back on. And we would just do a few little enhancements to it. And so, you don't have all the sort of permitting time or the construction time or the capital. So it's a huge advantage for the project to have that ready to go.
Let's talk about gold in general for a second here. Traditionally, over many hundreds of years, when the financial markets were a little shaky, people flocked to gold. More recently, there's been crypto. People are playing around with options. There hasn't been that sort of simple shift from one to the other. Do you look at the macro gold space as being something that is a little bit different now? It requires a little bit more nuance than it once did?
I think gold, people are seeing, and traditionally, like as you said, there's been a lot of sort of safe haven with gold, but people are also looking at gold as just in terms of liquidity in their portfolio, having a position in gold. And you see even the large sort of funds recommending sort of 5-10% sort of positions in gold, just from a liquidity point of view. With the rest of the sort of market, there's so much volatility and everything. I
Yeah.
think there's still a disconnect between the physical and fundamental sort of gold, and price of gold has been hanging in strongly above the sort of 2000. Now that hasn't filtered down through to gold equities yet.
Mhm.
And I think it will, and we'll be in for quite a strong sort of market for sort of gold equities. But I think encouraging saying above 2000. If you turn that into Canadian dollars, it's like $2,700 an ounce or something. So it's very
Sure.
strong if you're looking at a sort of cash flow scenario in the Canadian dollars.
And especially if you're potentially only a few years away from being able to turn on the taps.
Yes, yes.
Let's
That's the advantage we have.
let's talk about Jason Bahnsen for a second here. I was going through your bio. We often find guys that they're either technical guys or they're MBAs. It's very rare for someone to be both, to be able to keep the numbers and also watch the drills. Do you find yourself in a bit of a rarefied space in that respect? We often talk to geos that are like drenched in the
I'm-
tech speak and can't really get out of it. But to be able to cover both sides is pretty unique.
Yes, I guess I've always had a mining hat on, but I've done almost every job within that sort of sector. I originally a mining engineer, but then spent quite a few years working underground as a miner
Okay.
and supervisor in the mines, working for contractors, working on gold mines, very similar to what we're talking about here at Elizabeth and Blackdome in terms of small scale gold mines. And this was in Red Lake and Yellowknife and Timmins and all the famous sort of gold camps. Ended up living over in Australia for a while, working with Major Rio Tinto, looking at big projects, and then sort of stepped into sort of banking and got very involved on the sort of commercial side of it, both in big M&A deals in Asia and equity deals, and then came back to Canada. I went away from Canada for 6 months, and I could date myself a long time ago, 1990. And came back 20 something years later. So when I came back to Canada, I got involved with a sort of few juniors. So that's the one thing in these sort of junior companies, we keep it very sort of small in terms of the overall management team, as lean as possible, and you got to be a jack of all trades. So both the understanding of the mining, the guy that puts the PowerPoints together, presents them, it's a one-stop shop here,
Right.
So all those sort of skill sets, I think, are advantageous. But
You're one of those
that's right.
dusty boot CEOs that we talk about, guys that can stand there and argue with the mining services guys when they're being done wrong.
Yes, I can wear both hats.
Yeah. So
Yes.
it was someone like yourself that's been through a lot of companies, been through every corner of the industry, been on the banking side. I always kind of find it interesting when guys with that sort of track record settle in on one project and just say, well, this is the thing that I'm going to be doing now for the next 5 to 10 years. This is the one. Do you find that other people in the industry see the importance the same way you do, or is it a little bit of a long education process to show people what you see?
I think people do have to have a little bit of patience. These things take a little bit of time. But we come at it with we're not just promoters. We're not just trying to flip something for something. We're trying to build some real value here. And we came across this opportunity. One, the high grade, the existing resource is what attracted us to us. We cleaned up the sort of structure and I've had two very successful exploration years, banking ounces, which we'll see very soon in the resource. So I think we came at it with this sort of vision that sure, if something else comes along and the combination or taps us on the shoulder, but we have a sort of a path to sort of cash flow. And I think raising equity is tough for these juniors. You're competing with, a couple other thousand juniors competing for that same dollar.
Sure.
So, if we can establish sort of cash flow from this and the capacity of the existing infrastructure and at the existing grades to be about 25,000 ounces a year, that's a significant amount of sort of cash flow.
Sure.
And with, we think it'll be very sort of low cost as well. So
you don't find a lot of small cap mining guys talking about cash flow, quite frankly, because that side of the equation for a lot of projects, for a lot of deal guys, that's off in the distance and they might not ever get to that place. They're really thinking about raising money, doing some drilling, bringing in a JV, maybe flipping it, moving on to the next thing. But you seem to be very focused on, look, there's going to be a point where we're going to have that mill running. There's going to be a point where we're going to be able to dig in where we know there's gold. And this thing's going to produce at some stage.
yes, I mean, I think that is very achievable with what we see, and we should be almost there in terms of the number of ounces we need to make that work, on this sort of estimate. But in terms of having access to that sort of cash flow, I can do a lot with that cash flow. We can grow the company. We can look at this sort of regional consolidation as we see all the number players there. There's all sorts of things we could do, and the project has potential to host very, very large scale deposits. As you mentioned, Barrick is right beside us. That's a copper porphyry target there called Poison Mountain, and that's contiguous with our licenses. And with the 300 square kilometer footprint, and we have done regional geophysics, and that's something else we're going to start looking at this year. We have been focusing very much on drilling these veins. We're going to have a drill program as well, but we're also going to do some more regional reconnaissance mapping to look at the bigger picture, because we think this project could also host major multiple million ounce deposits or potentially copper mineralization as well, generated all in the system. So it's got the potential for, and we do get interest from the majors because of the land position, and they're all looking around. So while we have the focus on sort of cash flow concurrent to that, if there's something larger that comes along, or that, I think cash flow it's never a bad thing.
Never a bad thing. It's
never a bad thing.
Well, look, you got the big neighbors, as you said. You're 4.5 hours out of Vancouver. You've got a track record that shows you know what to do at the coalface, literally. You've got two audiences of shareholders in Canada and Australia. The potential for extended hours of trading once things start really kicking over there. A mill. Yeah, like you've got a lot of stuff going on for you here for a company with a market cap of about $9 million. If you wanted to put all this together from scratch, you'd have to spend many times more than that just to get to where you are.
Sure, just that mill itself would be $60 to $80 million for the mill, and I think part of the on the valuation side, like you say, we got a very small market cap at the moment. Even compared to our sort of peers that are comps that are around us, the Taliskers, the West Havens, they're all around $50 million market cap. So and I think we have very good quality assets and similar sort of stage. So I think as people get to know this story, I think there's a real opportunity for that gap to get closed, and people to do to get in at this point to do very, very well as the story becomes well known and people see the quality, and we put this resource statement out that'll give us another sort of marker in terms of capitalization per ounce of resource and things like that. Put the mill study out, it'll start looking like, hey, these guys, we're serious about this.
Yeah, for sure.
We are.
Let's talk briefly, because we have a younger investment audience. Let's talk about the ESG side of things. The traditional on the legacy side, mining is looked at it by many people as a terrible thing. Modern mining is a lot different from the way it was even 10, 15 years ago. What is Tempus doing on the side of sustainability on the mining side?
Yeah, well, it's something we take very seriously on both the environmental side and in our relations with First Nations groups that are our partners on the projects. So Tempus is, in terms of the First Nations, we've taken a very progressive approach, sort of adopting the sort of UNDRIP nomenclature for consent versus consult. We have 3 agreements in place, which is quite progressive here in British Columbia. These are expiration agreements with 3 different bands, and we're working on a sort of 4th. Those we encourage, participation from our band partners in terms of our employment. Half of our workforce at the camp at Elizabeth over the past few years has been sourced from the Hoisin community, part of the Indian River band that is our partner. And we also we from very beginning of the projects, we have a very intensive program of environmental monitoring. We take water samples both upstream, downstream on both projects. This is useful to establish a sort of baseline as well. So and that's another thing that our First Nations employees that are from the community participate directly on those environmental stewardship programs with us, and are taking the samples in the field with us and have real ownership over those sort of results and see what we're doing. Likewise on the whenever most of the drilling is on existing drill roads to minimize the sort of overall disturbance. But if we have disturbance, we involve sort of cultural advisor from the First Nations group, and just to make sure there's no evidence of any First Nations artifacts in the area that we're building a pad or something like that. So it's something we spend quite a bit of time on. We have a dedicated sort of ESG fellow that helps us with all this. And I think this is the way forward in mining. There's a right way to do these things, and both from a relationship point of view and the environment.
Yeah, well, it takes a long time to build a good reputation and a short time to lose it. So I think you're on the right track there by making sure that everything's in place. I find that almost every mining explorer right now has at least put some thought towards Indigenous involvement and best practices in terms of the environment, which is a nice change because we don't want to be doing this for the next 50 years without burying ourselves in the process.
Yes.
So lastly, Tempus is it's got a decent volume on trading. In terms of the Canadian side, it's not crazy, but it's decent. If I'm looking at level 2, you're hovering around 4.5 cents, but the jump to 5 cents, 5.5 cents, 6 cents is really not very big. Do you really sort of look at the 43,101 and think, there's a bit of a coiled spring here? People are just sort of waiting to see what will happen.
Yes, I think so. That's certainly going to be a sort of catalyst and significant event to sort of prove what we have. The previous resource work that was done was 2009. It was a much different environment, 1,000-ounce gold, much higher sort of cutoff grade than we would be using now. So it should it'll be much more accurate and just a lot more information. So we think that's one of the key catalysts to also help on the comparativeness. That could involve the comparative valuation between the other sort of comp companies in terms of they're trading at 4 times what we are. So that could be something that closes a sort of gap that shareholders could benefit from.
Well, people are always looking for a catalyst, and if you're expecting that to drop around June, well, that's not very far away. So I guess that the train is tooting at the station.
Yeah, and we have we're just gearing up. It is a little bit seasonal, the project, from a news flow point of view. In the one in BC, we're at 1,400 meters. So now we're just sort of gearing up for the season. We're going to be starting here. We're starting to open up the roads now. We'll be in there in sort of June. We have a number of things happening, like I say, on the disclosure or major news events of the resource, the mill study. We're going to do a study of the sort of haul road that links the two, and engineering work there. We'll be drilling some more high grade results where we're doing some infill drilling. And we're going to start looking at doing some more regional mapping and rock sampling to try to look at the bigger picture. We did this aeromag a couple of years ago, certainly highlighted that this overall project has, huge potential. So we're going to start looking at the sort of more reconnaissance work, brownfields expansion of the targets.
So this is the go time. The share price has been pretty static for the past couple of months, but things are starting to come together to get to a place where you're either in or you're out.
Yeah, yeah. We just did a placement that we announced this week. We did that quite quickly in Australia. We raised $2.5 million at 4 cents. I think there was quite a bit of appetite on that. So people see at that price, it looks like a very attractive opportunity.
Good stuff. Well, Jason, thanks for telling us all about it today, and we'll be in touch again shortly. And I imagine when that 43-101 drops, there's going to be a lot to talk about.
Great. Thank you very much, Chris. Pleasure to be on.